Hey everyone, today is Wednesday and we will do a quick catch up during the middle of the week so that it's easier for me, easier for you. So I had these trades, some losers with mixed risk management, which puts me like 1% up on this week. Let's quickly break down some trades. So first one is US 500, and on monthly we are just historically bullish. We mitigated this deeper zone here and showed a reaction, so started to move up. On the weekly we have been moving to the downside, and then recently we broke this high, so overall it could be treated as accumulation on weekly, just moving up and then back and forth with the recent break up. And on daily, it's of course just a big accumulation with a possible start of this local uptrend. And so again, this is, as you can see, could be treated as a huge accumulation. Why? Because back and forth, break up, break down, accumulating orders, and then breaking up. Partnered with higher time frame. And then recently we had this breakup. So we had this breakup. We had recent up movement with reaccumulations here. And then on 4 hours, so on 4 hours things could be named as a bit overextended, though we of course have some reaccumulations happening, but overall we already have several shifts to the upside, consecutive starting somewhere from here. Again, it's not that important. More important is that, so this is my entry point here to the long side, and as you can see we are already moved really much. And usually, so it's not again the critical problem, because what the market often does is moves up, then consolidation, and continues to move up. But basically this consolidation, this was my entry point, is can be treated as a bit too short. But what I was looking at for is to here to happen something like here. So we have a big move up, consolidation, and a continuation to the upside. And then on 1 hour it looks even more overextended, and on 15 minutes we just have moves to the upside, reaccumulations, move to the upside, and recent price action is just consolidation during the Asia, during the London, and then a clear break to the upside. And I decided to enter on here. So let me quickly play through the entry time frame. So we just opened the session, started a big move up, as you can see, after moving overall up, overall up, as you can see structurally on entry time frame, left this unmitigated zone, and when the market came back into the zone and started to move up on this candle, I entered. However, I entered on the phone and I was away, so exactly at this point it should be a break even, but unfortunately I didn't put it to break even, and it stopped me out and went to some profit here. So again, because of my adjusted management, it would be a break even for me, because I try to wait for 5 hours or so and then only then trail to survive these reaccumulations on the wave up. But yeah, this is basically what happened, and this was a quick trade. Again, I risk here like really small, like 0.5, because I really rarely trade US 500. But overall I like this trade, everything just moving up here, and it was okay. So Euro USD, again, same zone. We are still in the same zone like on previous week. So high time frames could be 50-50, but overall, because of this recent price action, it's like a bit more bearish, a bit more bearish. But at the same time, on 1 hour, we started to show this clear up move. Again, in this downtrend, how do you think, what model is, so if we are not only looking at immediate structure, but yeah, more on the context, what model is this? Down, 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 and then up. So if you know, this is a redistribution model to continue to the downside. However, because we had this clear shift to the upside and the price didn't continue through here but created one more push to the upside, I try to participate in this possible deeper redistribution, let's name it like this. And on 15 minutes what we had is a reaction from 1 hour, and then creation of this chain after this move up, consolidation, break up to mitigation of a clear zone, and another break up. So I was playing this local possible accumulation, possible development of the uptrend, and this is what I had here. So again, this is 15 minutes shift. This is how 5 minutes are looking like. And let's play the price. Let's play the price from here. So yeah, I was after that mitigation. So again, this is 15-minute zone. After that mitigation, I was just looking to enter, and we had a 1 minute. So this is a reaction, and 1 minute structure starts to shift first on internal structure basis. Oh, actually no, it was a real structural shift and one more real structural shift. Price mitigated the zone and started to move up. So here I entered. Oops. And yeah. And then it was a looter, I guess. Yeah. So I have no possibility to go to break even. And then what happened is that so this was just before the London opens, and this was on the London open. So we started to move down and breaking this 15-minute, sorry, 5-minute, I guess. Yeah, and start to break this intermediate zone on 5-minute, and creating this structure to the bearish side. And so at this point, I just decided, okay, if the price wanted to move up, it would do it from here, but it just started to go down, and on London open it just went created this clear range, not the best but not the worst zone, and mitigated it. And so when it mitigated and started to move down, I entered with the overall bearish bias, and with the idea that, okay, if we look at daily, so again, remember in the beginning I said because of this recent price action of this intermediate break on the daily, mitigation of a zone, and already some movement to the downside starting, it could be accompanied with this redistribution model on 4 hours, and basically that's it. Yeah, so this was an early try for the entry. Price went down. So it went up, held the zone, and went down. Didn't went to break even yet, and then it went just real aggressively up, maybe to mitigate this zone, this fractal zone, and just to close more orders, the orders they needed to close. But then after this aggressive move, we saw this aggressive move, and so after this kind of price action, it was like real fast. I understood that maybe some bearish momentum will come in, and then here I went to break even after this break and started to match the trade. So I ideally I needed to wait for 5R. However, like basically again formally it's just my mistake. To be honest, I just didn't want to lose my profit at this point, so closed 90% at 3.4R for 3R profit, and then just let everything else run. When it went to 5R, started to trail as per my overall idea for trailing management. So it hit 5R, And then ideally I need to decide either to close or just trail with previous confident breaks, which for me are this. Then trail to here, and basically my 10% that was led was stopped out here. So in this specific case, even if I waited for like actually no, if I waited for planned management, it could be for 1.5 are better. But again, I'm not like angry for myself because of this, because I'm still working on this adjusting management, and I'm basically fine with some changes of the rules just on the go. But analyzing the journal, just seeing how it all goes, I think I need and I will try to be to start managing and to start trailing more close to actual 5R, because when the trade is running, 5R is a real decent target. And yeah, sometimes the price just comes to 5R levels and just bursts through the 5R, so given possibilities to trail for 6R right away, and then sometimes more. And yeah, this kind of management, I feel, for me will work really well for some time, and then I will see. And then then UJ again, same bias like from the previous week. So weekly is still in a possible, or even basically not possible, it is a reaccumulation. So we discussed it in the previous outlook. Everything is the same: up, 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 down, and up. So this is a classical reaccumulation daily. If we look at here, it's a classical accumulation. So back and forth with a recent break up here. So really bullish. Then 4 hours. A classical reaccumulation, up, 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 reaccumulation, up. Mitigation of the zone. So let me zoom in a bit. So again, really bullish. Many time frames, I mean all the time frames showing bullishness, showing actual immediate structure to the bullish side. Models and context is really nice. So I was long in here. And why it is real nice? Because I didn't try to long here, which is also possible, but actually I was looking at the market already during the mitigation of a deep, the last unmitigated zone. So it was a really nice place to enter. And as you can see, this was the last shift. Structurally, this was the mitigation, and not only the mitigation here, but already, as you can see, some fractal structure created, and we can take a better look on lower time frame. So this one is forward tested. So this is an example of an early entry. So let's take a look here how the price developed. So as you remember, this is a 4-hour impulse in an overall extremely bullish environment. And again, if you look in order, you will know that like previous 8 or 7 outlooks, I guess, I was basically bullish on UJ. Of course, even if you know the direction, I mean, I can't expect that I will catch every move. I can't even expect and with a big amount of confidence that I will catch anything, you know. But I think I caught several moves, and that's enough for me. So how it all developed for this forward tested trade, it was like a bit hindsight, a bit forward tested. Just decided to put it out for an example. So the market is mitigating the higher time frame zone. It's moving not, and by the way, pay attention. What is the model of this movement, of this first initial pullback? As you can see, it's just down, down, down. So it's just a usual structure, so even not a model. And what is the model of this? So we have up, up, down, up, down. So this is a distribution, back and forth plus down. So it was basically not a real good idea to enter here, because the model, the context of this is just a first step and basically distribution downtrend. But what is the difference between this and this? This is a different model. Now we have down, up, up, down, up, up. So this model now is an accumulation. Yeah, vertical accumulation in an overall extremely bullish environment during the mitigation of a high time frame zone. So you see, so this kind of entries is a big problem for me. This one is much better. And now let's take a closer look specifically at execution. So here on 15 minutes we are still structurally bearish, but starting to develop some internal structure aligned with high time frame. On 5 minutes it's more clear. We have internal shifts with mitigations, and then real shifts with not so deep mitigations, and one more shift with really clear perfect mitigation of this hidden S&D. And on 1 minute it looks like also just structural shift, here, mitigation of the zone, and a move up with a possible trail. So you could wait here. So this kind of trade is just really nice. So you could wait, for instance, for 5 hours. So you have just an alert, and then you start to trail maybe to this low, then price makes a confident break. You trail to this low, wait, price went higher, makes a confident break, you trail to here, then price goes, maybe goes to here, you trail to this low, then price takes you out like at 9 hours. So this is a phenomenal trade. Again, this is just an example for me and for you. And then, so what the market created? A move up, a strong reaction from the zone, which on 1 hour looked like this. So on 1 hour is just a structural shift to the upside from a 4-hour zone. And then on 15 minutes, we created, so on 15 minutes we actually didn't create anything. So we have a 1 hour zone here, hit, starting some possible accumulation. Basically, at this point, because of this move, actually it cannot. So this model could not be treated as accumulation on 15 minutes, on 5 minutes, basically, because it's just a down move. So this is again an example of more early trade entry, but again, given everything we saw before, this is still a nice place to look for entries. But the problem is that what I did is I waited. Actually, I opened the chart here, and then I saw this up movement. And basically, to be honest, I became a bit emotional in terms of I wanted to enter, and I understood that the context of this trade is like really great. So everything is bullish, and I badly didn't want to miss this move, and I entered from this 1 minute range. It failed. So for me, it's okay entry. So we have a mitigation entry, and it's broken out. This one is just a re-entry, and I think it could be avoided. And then later, price mitigated deeper zones on 5 minutes, and I just after this up push from mitigation of this zone. So this is a refined zone from 5 minutes. So this is a refined zone from 5 minutes, and again, basically it was a mistake. You know, the session was not even London, and I could easily avoid this kind of trades, but again, that's fine. We had 0.1, 0.1, 0.15 risk. Here I entered, protected, got stopped out, re-entered here, got stopped out again, and then on this internal structure shift and mitigation of this zone, I guess, or unmitigated parts of it. So we have a mitigation, and here I entered, protected myself there, Yeah, I mean, it looks awful, but it is what it is. Basically, yeah, it's not that good, but I worked all the time with the same 5 minute range, and yeah, it was still okay for me to enter. Somewhere here went to break even, and then price went almost to break even, but held. So created a push, this local reaccumulation, and started to move higher. And here at this point I closed 95% for 4R profit at 4.4R in total, and then trailed to here. So again, why I did it? Because of this. So we were almost at 5R, basically at 4.9, so this 5R, and we were here and we started to move down, you know, we started to move down again. After these losses, I would better just trail more early, so I closed here and trailed. Yeah, but again, formally on the idea itself for my management, I should have trailed either to here or maybe full position here, but I mean, again, still working on this. I was stopped out here, and then price continued higher. Oh, no, it went all the way probably to the downside, and then some news came out. So it went even higher, like to 7.2, and then news came out, took everyone here, and created a beautiful move to the upside with possibilities for re-entry on 1 minute. So basically it was possible here, as you can see. So we have a break up, and mitigation of a zone. So this was the first possibility. Then basically nothing, maybe something on fractal, so maybe something here based on fractal structure. And it continued to go to the upside. So this was a nice possibility. And it just went and went and went. And this is the current moment. So this was my first half of the week. Again, pay attention to USD/JPY, so you can go back to this period. Again, price is live. I don't know what is happening, but by the logic of how the price is moving, how do you think yourself what will happen? Yeah, so this is my question to future you. You will already know what's happening, but what we discussed, everything is bullish. So what the price wants to do, take this or take this? I mean, almost surely it will take this, maybe then show an impulsive break, maybe then pull back, and we will start to take this. So weak hands will sell this zone, and already starting to sell this zone really strongly. And again, it can work, you know, it can work, but overall the market is obviously looking to this this high. And by the way, it is all supported by fundamentals in terms of rates. So Japan has really low rates, and USA have really high rates, and they even plan to take them higher. Okay, see you in the next review. Bye.